Fight, fight, fight! Today on Neppy Invests, we have an ASX Stock Fight. And I'm going to compare and contrast two companies, and those two companies are fairly similar in what they do, in the same sector anyway. And they've also have a bit of a history between each other. They've about 2.5 years ago, I'll get into that in a second, but because of that history and because of what they do and because of the relative success and failures of the two companies, I thought it'd be a good idea just to compare and contrast what they do, how they've done over the last few years since that history was developed, or that relationship was developed, and that's about it. So these two companies are Mosaic Brands and Chic. So these two companies don't really cater towards someone like me. They're catering more towards a different sort of client and customer. So let's get into the first company, and that company is Mosaic Brands. So Mosaic Brands have a numerous sort of brands, and they include Noni B. In fact, they were once called Noni B. Miller's Women, Katie's Autograph, Rockman's, Crossroads, Be Me, Rivers, and W Lane. So quite a few of these companies or brands I've never been into. In fact, every single one of them I've never been into except Rivers. And I've been into Rivers maybe once or twice. And all the other brands don't really cater towards someone like me. So it's more of the female fashion, that sort of thing. So, and that's why, even though they're not catering towards me, I'm still interested in them because I'm interested in every single company that I can look at. The other company I'll be focusing on today and comparing and contrasting to Mosaic is Chic. Now, Chic is more of a niche sort of retailer, and you can just see here this is one of their sort of a grab from one of their presentations. So this is a plus size women. So they've developed a niche to focus on plus size women. So I'm not a plus size woman. So again, I'm not a customer or a clientele or a target for Chic. So they've done very well with this sort of focusing on a niche, developing, being an expert in this niche. They've done very well in that. So I'm sort of giving away the fight by saying all this. But yeah, that's it. Chic. So let's compare Chic and Mosaic Brands. So a few differences here, but a few similarities. But a couple of things I really like about Chic. I love their motto, a world of curves. That tells me what they do in a very short sentence. 4 words, I know what they do. World of curves. So that's catering for plus size women. So they're a niche retailer doing that, focusing on a very good niche, a growing niche. They have a significant online presence. In fact, the little grab I've got on below there has their 4 brands, and 2 of those brands, Hips and Curves, Fox and Royal and Avenue, have only an online presence. And probably the other thing here is their regions or their focus or their market is the world or global. In fact, all their brands are in the United States, also in America, in Australia, except Avenue. So they have this growing presence around the world. Mosaic Brands, on the other hand, their little motto, so I went to their website and this was their motto on their website, is a very convoluted, long, and sort of meaningless motto. So this could work for any sort of company. So our collective purpose is to help customers express their love of life by embracing the truth that every occasion is a special occasion worth feeling fabulous for. That could work for almost any company. It doesn't tell me what Mosaic Brands do, what their focus is, and that's about it. It's a very vague sort of nonsense, sort of cliche, corny sort of motto. So they are a broad fashion retailer. They call themselves a specialty fashion retailer, but I don't see how they're specialized in anything. Few of their retailers are plus size brands or do focus on plus size brands, but not all of them do. They have a small but growing online presence. And one of the things that did give me concern about I think it was the chairman said their focus or their main focus is bricks and mortar because that's what their customers want. The customers want to go into the stores and shop in their stores. And by that, it seems like they weren't focusing on the online presence as much as maybe I would like them to. Because of that lack of growing online presence, they're still very limited in their scope. So they're only in Australia and New Zealand. If they started growing their online presence, they could become a more of a global power phenomenon, but they're not. Another thing I noticed also in their online presence, they are starting to increase focus on their online presence just because I think they're forced to because of COVID-19. And if they didn't do that, they probably would have been gone bye-bye by now. But anyway, I've just noticed in one of their presentations recently that their online presence, they are selling a lot of stuff. So not only fashion, electrical appliances, tech, kitchen stuff. So that's not really fashion. That's sort of outside fashion. Even home decor is not really fashion. I know you could argue differently. And pets, they're also selling stuff for pets. So they're sort of broadening what they do on online, which may be a good thing. Okay, so what is this history between Mosaic Brands and City Chic? So funnily enough, a few years ago, about 3 years ago, they were both called something differently. So Mosaic Brands was called Noni B, which is actually one of their brands now, and City Chic was called Specialty Fashions. And what happened in 14th of May 2018 is that City Chic decided to sell quite a few of their brands they had to Noni B. And those brands was Miller's, Katie's, Crossroads, Autograph, and Rivers. And they sold them for a total of $31 million in cash, which might seem fairly cheap. But what the Especially Fashions management did, and I'm a big fan of what they did, is they said these brands, Miller's, Katie's, Crossroads, blah, 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 weren't profitable. They were really holding the rest of the company back. And the rest of the company was City Chic. So City Chic, specializing in the plus size women, was doing them really well. It was profitable, it was growing, had an attractive outlook. And they went, why are we holding these brands that are holding us back? Let's just sell them to some sucker and we can just focus on what's working. And that was a very smart thing to do. On the other hand, Noni B decided, why don't we just buy this stuff, all these brands that weren't working for specialty fashion, and then maybe we can make them work. They used words like synergies and all that sort of thing, and they really focused on how much the revenues were going to increase. They said total sales would treble to $1 billion. That actually caused a bit of alarm for me when I read that, that they were focusing just on revenues. Just revenues themselves doesn't really hit me, but just because revenues increase, that means nothing. We've seen this a lot when companies do acquisitions. They think revenues are going to increase and therefore the bottom line will increase. In turn, it doesn't always work, and Slater and Gordon will attest to that. So just looking at this one acquisition or this sale, this was sort of where both these companies diverged on their paths moving forward. And you can sort of give a bit of a clue that City Chic is going to be the winner of this fight with Mosaic Brands. So let's look at the charts of the financials, So this is the 5-year financials for both companies, just very, very, not looking at much. So it's just looking at revenue, profit, operating cash flow, and market cap. If you go back to financial year 2016-17, you can see City Chic had revenues over $800 million. And even though they had massive amount of revenues, they weren't profitable. They did have operating cash flow positiveness, but very low market cap, around 100 million or so, less than 100 million. But just because you had massive amount of revenues, that does not mean the bottom line is doing well. And City Chic in 2016-17 will attest to that. And Mosaic is actually finding that out right now. So once we go into 2018 and onwards, we see revenue for City Chic decreased a lot, but started to grow. And started to grow because they were focusing on that brand that was doing them well, that was working, and that was City Chic. And from there, they could grow and make the company profitable and just make the company more valuable. And you can see that in the market cap. So the market cap has gone from 77 million in 2017 to 558 million this financial year. They are profitable and operating cash flow up to 25 million. So, great news there, or great financials of the last 3 years from City Chic, especially the market cap. The market is really liking what City Chic is doing. Now let's compare that to Mosaic. So back in 2016-17, we had revenue fairly low compared to now. and they've grown the revenue to over 800 million or near 800 million, which is very similar to what City Chic had in 2016-17. So sort of what they've done is this acquisition and sale has just reversed. So City Chic was what Nerdy B used to be, and Mosaic Brands now is what Specialty Fashions used to be, and the financials have just switched around. It's just they've done a sort of a body transfer, that sort of thing. And you can see profit minus $170 million this year. Operating cash flow quite high this year for some reason. I don't really understand why it's so high. And it doesn't make sense that the operating cash flow is more than the market cap. If that's real, this is the most undervalued company on the ASX in history, because when you have operating cash flow more than the market cap, that would say it's very, 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 very cheap. But you can see the market cap's really gone down. It's gone from nearly $300 million in 2018 down to $70 million this year. And just compare that to City Chic. Fortunes of these two companies have just turned around. Now let's look at the charts. So just by looking at, or by understanding the market cap, how that's changed for both these companies, you don't really need to look at the chart. We know the chart's going to look ugly for Mosaic Brands, and the chart's going to look amazing for City Chic, and this is just confirming it. So Mosaic Brands at their acquisition, acquisition, they went from a share price of $2.50, and right now the share price is 82 cents. So share price has gone down 67% since that acquisition. So in no way or terms could you say this acquisition was a success. I think shareholders who have been holding since the acquisition would be saying it was an actual terrible disaster, and it was not a good thing. Now let's compare that to City Chic. So City Chic shareholders back then at 40 cents at the time of this acquisition. In fact, the share price was as low as 11 cents in 2017. And I know that because I was actually following Specialty Fashions at the time, thinking if this company turns around, the share price turns around, I might buy in. That buying in time or price was 20 cents. I think that was late 2017, early 2018. I was actually thinking of buying in. I just held back. I don't know why. Anyway, you see the share price has been going up since then. We had a bit of a blip during the COVID-19 financial pandemic panic, but then it rebounded really well. Great buying price at about $1. And share price has just been going up since then. And it's gone from 40 cents to $2.74, which is 700% growth in value. So if you compare the City Chic shareholder to the Mosaic shareholder in that time since the acquisition or sale, there's one very happy shareholder and one very angry shareholder. So what I've done here is I just wanted to look at some of their financials, both these companies, just have a very quick look. And there's one thing that really concerned me about Mosaic's balance sheet, particularly when you look at current assets and compare it to current liabilities. So typically when I look at sort of this financial statement, and when I look at current assets and current liabilities, I always want to see current assets above or greater than current liabilities. And that's a very simple reason behind that is if you have current assets more than current liabilities, the going concern, the forward going concern in the short term is quite healthy. When you have current liabilities significantly more than current assets, I do have to question the short-term viability of a company. So Mosaic Brands' current assets is at 218 million, current liabilities is at 415 million. So it's almost twice as high as the current assets. So that was a very strong sort of alarm bell that rang in my mind when I saw that. Just compare it to City Chic there, and on the left-hand side, current assets is 67 million and the current liabilities is 55. So any debts due, they're able to pay that in the short term. So I do have to question Mosaic Brands' financial viability moving forward just based off that little statement. So I do have questions. So is this a concern is my first question. So I've just had a very quick look. So just there may be some reason behind it. And the other question I have is why are trade payables so high? So if you look at trade payables, down here I'll just go to laser pointer. Look at trade payables here, 247 million, actually increased from previous year. So the other things you'll notice here is inventories have really gone down. So they've really decreased the inventories. And what else? Yeah, so borrowings, we've seen some borrowings increasing here. and the trading payables has really increased. So why is that? Why is it so high? Is this a concern? I'd like to sort of raise this with management or someone to understand why it's like this. Might even go into the financial statement later and sort of read some of these notes and try to get an understanding of why. But at this point in time, I do have questions about the ongoing financial viability of Mosaic brands. So when I look at the financial statements, I always love to look at cash flow. It's my favorite thing. So if I was just looking at cash flow for Mosaic brands, I'd be like very enthused about this company, especially with the market cap. So the one thing I really look at here is that first one, that net cash provided by operating activities. And Mosaic brands had $106 million positive in operations. So that's really high. They did borrow, so net borrowings of $50 million, payment of lease and liabilities. Bit of a change in accounting over the last year and so. You see this payment of lease liabilities both in their cash flow from financing activities this year, but you didn't see it the previous year. That's because there was that change in accounting standards. But anyway, when I look at that operating activities, because of the change in accounting standards, we should see a bit of a bump in the net cash by operating activities, and we definitely see that from 2019 and 20 in both these companies. But otherwise, 2019-20, good cash flow from both companies, or from Mosaic brands and City Chic had negative cash flow last year and has gone positive this year. So the one thing I take away from both of this is Mosaic brands, even though I'm concerned about the current liabilities so being so much more than the current assets, the fact that they had this operating cash flow positiveness also leads to some questions. So what are the results, or what are the findings of this fight between City Chic and Mosaic? So I've pretty made it pretty obvious through this video that this is a clear knockout to City Chic. I think the management have done a brilliant job with that sale of those brands that they weren't getting any value from, and then focusing on what was working, and that was City Chic, becoming sort of a player within that. It's really that good niche, that growing niche, and they're really growing from just focusing on that plus size women category, and just sell what that wasn't working. That brands, what was the point in just maintaining these brands that weren't working? With Mosaic brands, unfortunately, they probably didn't put the work in to have a win over City Chic. So poor execution, poor acquisition. At this stage, I think, I don't want to say there was hubris, but why did, if Beverly Fashions could not make those brands work, why did Noni B think they could make it work? So is that hubris? Is that believing that there's buzzwords like synergies that would actually, just because you use the word synergies, that would make them work? And just focusing on revenues, increasing revenues through the acquisition, because they're just focusing on that, makes the acquisition questionable in my mind. Yeah, so that's a video of Mosaic versus City Chic. City Chic definitely the winner in this case, but they are actually, with a market cap of over $500 million, the market is really liking City Chic, and they're really down on Mosaic. The one concern with Mosaic is that current assets being so lower than current liabilities. I would like the reason behind that. If it wasn't so, I would actually think of taking a position in Mosaic. So I hope you've learned something from this. Hope you've enjoyed it. So I do these videos for educational, entertainment, and research purposes. And if you do need some specific, specialized financial advice from an expert about your own financial circumstances, make sure you seek out someone who is qualified. I'm not a qualified person to speak about that. Otherwise, have a good day, and I'll speak to you later.